The current live trading price for Plug Power stock is $2.75, marking an intraday drop of 1.79% during today's session. While the broader indices are experiencing standard macro-driven fluctuations, this specific price correction tells a far deeper story about the complex tension playing out behind the scenes of the hydrogen sector. Looking purely at a standard chart on a conventional online investing platform might lead you to believe this is just another routine sell-off for an historically volatile clean energy favorite. The standard narrative floating around online investing communities is that Plug Power is permanently caught in an inescapable cycle of heavy capital destruction and infinite share dilution. The immediate reality, however, is far more nuanced and reveals a significant divergence from that retail consensus. Right now, institutional trading volume is quietly shifting as the company executes a highly deliberate, creative balance sheet salvage operation that most retail traders using a standard retail individual brokerage completely overlook. Just days ago, management closed a $39.2 million transfer of a federal investment tax credit linked to its St. Gabriel hydrogen liquefaction facility in Louisiana. This follows a similar $30 million asset monetization from their Georgia site earlier. What this tells us is that while the market continues to price Plug Power as a distressed asset on the verge of running completely out of cash, the company is actively establishing an alternative liquidity pipeline through federal policy mechanisms. They are essentially extracting real, immediate value from their physical infrastructure assets without having to issue massive blocks of secondary equity to the open market at depressed single-digit prices. This decoupling between perceived distress and structural execution is exactly where the sophisticated tension lies in this equity story. When you look at general investor expectations, the prevailing belief is that any company trying to scale up an entire infrastructure network from scratch is fighting a losing battle against interest rates and inflation. People open their portfolios, check their favorite investing sites, or look through their premium accounts to see a stock that has pulled back roughly 40% from its recent 52-week highs of $4.58. The emotional response is to assume the fundamental thesis is broken. The reality you have to confront, though, is that the company's recent financial reporting showed 22% year-over-year revenue growth and 71% improvement in gross margins. This indicates that their primary challenge is no longer proof of concept or top-line demand, but rather the sheer physical mechanics of funding their capital expenditures while awaiting larger project financing approvals. The sell-off we are witnessing today, down to the 2.75 range, represents a classic market standoff between short-term liquidity panic and mid-term operational stabilization. To see the big picture, you have to look at how institutional capital is interacting with this asset across major trading ecosystems. If you analyze the order flow moving through sophisticated institutions like Interactive Brokers or comprehensive wealth platforms like Fidelity Investments, you notice an interesting divergence. Retail traders on platforms like the Robinhood app are often reacting to daily price headlines, leading to rapid, high-turnover trading volumes. Meanwhile, institutional money managers handling larger portfolios are looking closely at Project Quantum Leap, which is Plug Power's internal roadmap designed to hit positive adjusted EBITDA by the final quarter of this year. These professional desks look at the supply agreements, such as the 30-megawatt electrolyzer supply deal for the Barrow Green Hydrogen project in the United Kingdom, which recently achieved a final investment decision. This proves that international commercial adoption is continuing to tick forward, regardless of the daily noise reflected on domestic stock tickers. This brings us to a critical inflection point regarding market sentiment and how retail investors approach the sector. Comment below how many shares of Plug Power stock you currently hold, or if you are choosing to sit out the clean energy market entirely right now. Hearing your perspective helps gauge whether retail conviction is genuinely starting to exhaust itself at these valuation levels. The core tension with Plug Power stock always goes back to how the market prices capital efficiency. For years, the company operated under a model where capital was cheap and growth was prioritized above everything else. When macro conditions shifted, the stock suffered a punishing re-rating. Now the operational reality is catching up with the new economic environment. Looking at the broader ecosystem of online investing sites, the platforms that offer automated strategies like Schwab Intelligent Portfolios or various robo-advisors automatically filter out companies with negative trailing earnings per share because their quantitative algorithms require strict near-term profitability metrics. This mechanical selling creates an artificial supply overhang. For self-investing individuals who prefer active investing over automated models, this programmatic selling can create valuation anomalies where the underlying infrastructure is valued significantly lower than its replacement cost. Looking deeper into the operational framework, Plug Power operates a vertically integrated hydrogen ecosystem that stretches from production and storage to delivery and fuel cell generation. They have over 74,000 fuel cell systems deployed globally, primarily dominating the material handling market from major retail distribution centers.
This existing footprint provides a stable, recurring baseline of demand for their hydrogen generation network, which currently produces approximately 40 tons of liquid hydrogen per day across its active commercial hubs in Georgia, Tennessee, and Louisiana. This existing industrial footprint is the hidden backstop to the entire investment thesis. It is not an abstract concept. It is a physical, operating network that large enterprise customers rely on daily to keep their logistics moving. The long-term plan relies on transitioning this industrial footprint from a cost-heavy center into a margin-positive operation as production efficiencies scale up. The history of this asset shows that older financial reports were continually marred by steep cost overruns tied to the procurement of third-party hydrogen fuel when their own production facilities faced regulatory or engineering delays. This legacy headwind is what historically crushed their gross margins and created the deep skepticism that still haunts the stock on forums across platforms like SoFi Invest or traditional individual brokerage portals. However, looking at the structural shifts throughout the first half of this year, those internal supply bottlenecks are beginning to clear. The Louisiana and Georgia facilities are now actively feeding their proprietary supply network, structurally insulating the company from the volatile third-party pricing that ruined past income statements. This shift is a perfect illustration of the lag between internal corporate progress and external market recognition. As we look toward the future outlook for Plug Power stock, the investment narrative is governed by a few critical catalysts and risks that will dictate where the share price moves over the next 12 to 18 months. The primary near-term catalyst is the potential finalization of a major government loan guarantee, which would immediately resolve the liquidity anxieties that currently suppress the company's valuation on every major trading platform from interactive brokers to traditional banking accounts. If that capital injection occurs, the reality of the company's financial stability will completely overtake the market's negative expectations, likely triggering a massive short covering event given the high short interest currently embedded in the float. Conversely, the obvious risk remains execution delay. If the path to positive EBITDA by the end of this year hits unforeseen infrastructure hurdles, the company may have to rely on additional capital raises, which would further dilute existing equity holders and compress the stock within its current single-digit range. When you look across the entire spectrum of modern investing sites, the choice for individual market participants comes down to structural time horizons. Those utilizing passive, long-term wealth platforms or specialized clean energy exchange trade funds tend to view the current $2 price range as a deeply discounted entry point for an industry leader. On the flip side, short-term momentum traders look at the descending moving averages and see a stock that requires absolute fundamental proof before it can sustain any upward trajectory. This clear division in market participation is exactly why the trading volume remains elevated, creating a highly liquid environment where every single piece of corporate news results in dramatic intraday price swings. Ultimately, the overarching lesson here is that Plug Power stock remains an intense battleground where expectations and reality are constantly shifting. The public consensus views the company through the lens of past capital challenges and persistent net losses. The emerging operational reality, however, shows an organization that is systematically utilizing federal policy incentives to protect its balance sheet, expanding its international commercial pipeline, and steadily repairing its structural margins. Whether this corporate turnaround succeeds depends entirely on their ability to execute on their near-term profitability targets without further balance sheet strain. For any serious investor tracking this asset, keeping a close eye on these shifting operational metrics will be far more valuable than watching the daily sentiment swings on a standard trading screen. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Buy/C. Don't forget to like, comment, and share this video to support the channel.